Look, thank you so much, and it's wonderful to be partnered up with Simon Johnson on our new podcast, Power and Consequences. A little audacious because in the world of economic minstrels, do we need another two folks, out there doing podcasts? But we're going to have some fun with it and speak about that. Look, in terms of private credit, I think that there's some risks there. But it's a small part of our overall capital markets. Yep. Don't forget, U.S. capital markets, $150 trillion or so, and this is a $2 trillion corner. But there are some risks, and I'm sure we'll get into it, particularly because they've offered to retail investors, high net worth individuals, what's called the wealth channel, to be part of this. And the wealth channel is turning on it. They're saying we don't want to be in here as much. Can we redeem out? And that's a little hard.
How do you respond to people that blame you as SEC chairman for opening up the door to this retail investment in esoteric things like Bitcoin and others, but also, Paul, how would you phrase it? Illiquid private credit?
Or less liquid, sure.
They blame Gary Gensler, Chairman Gensler. It's your fault. How do you respond to that?
That's a new one. I hadn't heard that, Tom.
It's in the zeitgeist. It's like Gensler and Biden let this happen. How do you respond to that?
Look, firms, alternative asset managers and private equity and private credit and hedge funds, real estate and so forth have been around, really for 50 years. In the direct lending space, that started in 2008 to 2012. Mark Rowan started Apollo, Steve Schwartzman with Blackstone. They were building big engines, and it was already probably, when I got there, at least approaching $1 trillion. So I just think that was something that was already growing.
Paul, it wasn't. You have it in your 401k, right?
Of course. One of the things I noticed, Rob, is when we do go out and talk to registered investment advisors, and we do that a lot at Bloomberg Radio, we go out to our sponsors, I'm shocked at the RAs, at the allocation to alternative investments. I would have thought it was 5%, 6%. They're talking 20, 30, 40%. They're talking like they're in an endowment.
Look, I think that's where we have the risk. It's a structural risk. Alternative asset managers, private credit amongst them, are bringing in institutions, sovereign wealth funds, like insurance companies, and then about a third of private credit. The investors are everyday investors. Lloyd Blankfein said it well. He was asked recently about it. He says, I don't get why they're doing this. It's when this goes down, the institutions, Washington, I don't care about. But when it goes down for private individuals, it's going to be bad.
Have you, with the celebration of Mr. Blankfein's book, how many book parties is he having? You've been to them all, right?
No, but Lloyd and I, we were at Goldman Sachs, and we were honored to make partner together. So he's a very clever and funny individual. So
Tom, I just referred to Gary as Rob. You know why I did that? His twin brother's Rob. That's the real
I do
one.
that.
He's a buddy of mine from back in the day.
My identical twin brother, Rob.
Yes.
Yeah, you're
he's a
hanging
buddy
out
of mine
with me
from back
way
in the
too
day,
much.
T. O. Price. He's the Gensler.
Across
I know.
America with this Gary Gensler, the former chairman of the SEC, in celebration of his podcast with the laureate, Simon Johnson at Sloan. Paul Sweeney.
So, Gary, the investors have been dealing over the last 3-4 weeks with all this issues going on in Iran, whipping around energy markets, whipping around all kinds of risk markets. How do you view that? When you talk to investors, I'm sure they come up to you and say, what do I do here? Because it's so much stuff I don't understand, perhaps.
Look, it's multiple shocks. It's shock to the energy markets, as we know, and I would look in energy markets not at the current price. I'd look at the September and December prices for both oil and for natural gas. I'd look at fertilizer pricing, and right now, probably we're going to have higher prices for agriculture in the fall because the fertilizer pricing has gone up, doubled in the last few weeks, and this is spring planting time. I think it's also is going to hollow out some of our longer-term growth. Like, we've a remarkably resilient economy. Jason Furman just wrote about this in the New York Times, but I do think that our longer-term growth rate is now clinked down a little bit more. And so I'd be worried about multiples in the equity markets when you have lower growth.
If you were back at the SEC, what would be your primary issue, worry, to-do item maybe?
So I would be getting the team together and say, what do we know, and can you pulse the various large banks, the JP Morgans and Goldmans, about what's called prime brokerage, where they have trillions of dollars loaned out to hedge funds. And then also I'd ask the bank regulators, how does it look about their loans to private credit? We recently saw JP Morgan remarking those loans to private credit. I'd want those interconnections to prime brokerage hedge funds and the banks to the private credit space.
Tell me about the hedging risk here. I brought it up the last couple of days, and all of this works off at New York University. Professor Roman Friedman has been wonderful. There's a hedging, and Greenspan would speak about this in celebration, folks, of his 100th birthday. We have hedging. There's a price to hedging always, and then, oops, things go bad. And within a hedge or out there, a re-hedge, or dare I say out again, what is our risk right now of there's a point where you have to re-hedge, you have to restructure all these derivative instruments?
Well, that is always a risk, particularly if a firm fails. And that's what we would look at when I was at the U.S. Treasury many years ago, and long-term capital management failed, so everybody has to re-hedge. So when there's breakage in the system, it's, as you just said, the re-hedge. For the listeners, a bank is counting on its counterparty to be there tomorrow, but when the counterparty disappears, then they have to take that whole position and re-hedge.
The certitude of the street, Gary Gensler, is we fixed this in 07, 08. The big banks are not exposed, but then there are the others. What are the shadows of the others that you're focused on?
I do think that the big banks have better capital position, or more resilient 2026 than 2007. But I do look at the significant leverage, that's the borrowing, in the hedge fund community, and yes, the interconnection between the banks and the alternative investors, the private credit space. And now back to just private credit, we are going to see some disruptions. I mean, AI is changing the world right now, right? And if it's a fast change, that means valuations are going to change a lot. This is like a barbell economy. If AI goes really well, that means some valuations, whether it's in software or other fields, have to decline.
Crypto, have we gained any clarity on who is regulating it, who should regulate it, to what degree should it be regulated? Where are we on that?
I think those are going to be questions that you'll have for my honored successor, Paul Atkins, and others. But the American public, they seem to be even more focused on prediction markets than crypto right now. So the investing public, I'm not saying they've moved on, but there's been a new darling at this little casino.
One of our colleagues at Bloomberg Television was just interviewing the CEO of one of these prediction markets, and adamant that it is not gambling. It is not betting.
There's no gambling in this town, right? No.
Come on, and I'm not going to blame this on you, but I'm sorry. There's this huge thing. I got to make some news this morning. Do you look at these prediction markets as gambling, Mr. Gensler?
Well, parts of it are, sure. Look, there's parts of it that is just hedging economic risk. But now you go all the way over to the sports world. And the sports world, that's just gaming. It is.
I'm going to go mental here. Raphael Auer at the Bank of International Settlements has written the smartest stuff I've seen on a broader statement of Bitcoin. They did a paper, 8 single sentence, single spaces, 8 pages of detail on the speculation within these markets. I mean, it's basically a casino, like people voting against Duke in basketball. I don't see Penn in the. Did you see the University of Pennsylvania in the bracket?
Hey, wait. That's my alma mater.
Yeah, I know. Beating Yale.
Did you see this?
I saw them.
Are you in the second or third row at the game?
I don't want to give that up, Tom. But look, I mean, investors can be taking a bet on things even when they're betting on an individual stock. But there are parts of the prediction markets and there are parts of the cryptocurrency markets that are just pure speculation. And so, how do we protect the investing public in those worlds? How do we protect the investment public in prediction markets or in the cryptocurrency markets? And importantly, how do we protect the integrity of the underlying, the elections? How do we protect the integrity that government actors aren't leaking information so that you can make a bet in prediction markets?
Okay, so Alexis's great-grandmother took Bitcoin from 30,000 up to 110,000.
Your great-grandmother?
I love that. That makes me
it.
about 3 years old.
And Gary, come on, we've gone from 110,000 whatever on BitDog back down to where are we? 74,000
sure.
today. Should 401k, should IRA, should grandmas be playing with these fancy things where we question the underlying?
Look, we let the investing public invest. We're merit neutral. That's our system. I believe that's a good system. However, we sort of have to have transparency. We have to have market integrity.
Right.
And we have to make sure that people protect those investors, that they're not getting picked off.
Okay, Paul wants to jump in. I got one more question. I'm going to shut up. Gary Gensler, you mentioned transparency. How should we mark to market private credit? I mean, is it by appointment? I mean, help me here.
That's the challenge at this. If it were just a pure institutional market, it was some sovereign wealth fund from Qatar investing in private credit. And by the way, that might also change the valuations. What's happening in Iran could be a little less money from sovereign wealth funds. But to your question, I think it's hard when you have the general investing public in, as you said, in 401ks or RIAs. And I think that's a very challenging and I would say problematic part of this private credit space.
Bloomberg News had a good story out yesterday about quarterly reporting for financial results for public companies. Europe and other parts of the world do it twice a year. We do it quarterly. What's your view there?
I'm very clear on this. I think it's one of the parts of the U.S. capital exceptionalism. Our capital markets since 1939, the New York Stock Exchange put this in the 1930s, and you're saying not everything in the 1930s, Mr. Gensler, is good. This is good.
Yep.
And yes, it's a little bit for the C-suite. Yeah, is it a little bit of friction? Is it a little bit like, oh, I have to meet with the analyst. I have to hear Tom Keene talk about my company. But overall, it creates so much public good. It helps our economy. It helps investors.
Right.
It helps the media. It does, but it's really an important piece. I wouldn't want to give that up.
Yeah, as a former sell-side equity research analyst, it was 4 times a year. You had to gear up and gear up and gear up. But arguably, that is a backbone, the transparency, one of the reasons that our capital markets are as deep as they are.
You did media years ago, right?
I advised the companies. Yeah, so I helped media companies buy and sell each other, the big newspaper companies, the new houses, Yes.
Okay, so Zaslav's pocketing $700 million off this transaction. Sweeney's expert on this. I'm the dumbest one in the room. Your thoughts here on the media roll-up and the politics of it, the idea of the White House directly involved. Mr. Atkins, I don't think, has weighed in on this, which is, I know you don't want to comment on that, but just your Gary Gensler media thoughts on our media roll-up.
Well, I think we were in a better system and a better rule of law when these decisions were not made in the White House. They were made at a Federal Communications Commission, if they were made at all. A lot of buying and selling of newspapers aren't done at the federal level. Buying and selling of radio stations technically are, but they're really done away from that. I think that's a much better way. And you have rules of the road and you stick to them. The idea of a White House picking winners and losers, that's not good for the rule of law nor for our economy.
When President Trump, his second term began, one of the themes was, boy, this is going to be really good for the financial services industry writ large, maybe taking down some of the regulatory risk, maybe allowing some consolidation of regional
lowering taxes on the companies.
Exactly right. How do you view the regulatory overview of the financial services industry today? Does anything need to change? Does it need to be loosened, tightened?
Look, there's an ebb and flow. Elections have consequences, as they should. And so there's that ebb and flow. I more am concerned in the longer term that as the U.S. has stepped back from our leadership around the globe, that our capital markets stay the sweet spot that everybody wants to be at.
Gary Gensler, one final question here before we let you start your morning here in Manhattan. You have so much experience at this. You've seen the good and the bad. We had Disney with a succession yesterday, 2 days ago. How do you do executive succession correctly? With all that you've, at Goldman Sachs and others, and frankly, at the SEC, how do you do executive succession correctly?
Look, it's hard. Simon Johnson and I just started this podcast, Power and Consequences. We don't know who would step in behind Simon or me.
Right.
It's just a small little podcast. But when you're at a big company, you really have to have succession planning. And Tom, you're terrific at this show. You have to have succession planning even for this show. And that's a responsibility you have to your shareholders. And to have that set up. But then it's hard because some of the most talented C-suiters don't want to stick around.
Right.
Jamie Dimon, terrific, run that firm for a long time. Well, you've seen loads of really good folks in his senior suite say, no, I want that opportunity in my mid-50s to go run something.
Right.
So but you have to start with that. The board of directors also has to be very involved and say, we need this succession planning.
Should we have more people writing an annual note like Mr. Dimon? I have a very strong feeling here we should, but let me ask you.
Well, look, Warren Buffett, Jamie, who I know.
We need more of these. The CEOs of this managed PR event with 47 people around them massaging a 2-paragraph message. It's baloney. It's better to know what they think.
And they're using AI now, so sometimes those messages are AI slop, too.
Yeah, that's right.
But,
that's a new term, right?
Do you let AI in your class at MIT?
Oh, good question.
Oh, it's everywhere, Tom. The students are using it. And I don't use it to grade students, but I do use artificial intelligence to do research, to challenge, so I don't think you can say in a classroom, oh, we're going to ban it. No, the calculator came along when I was a kid. We use it. The internet came along. Here's the thing, students, if you're listening, you have to command it. You have to challenge it. Don't let AI command you. You have to stay ahead of that. I call it the AI bear will get you unless you really run faster and challenge the AI.
Can I do one final question?
Yep.
With the time, final question with Gary Gensler. Are we going to see an AI roll up? There's just too many smart people running around not making money. Axios was brilliant on this yesterday. Are we going to see an AI roll up?
I think it is a field where you'll see winner take most, meaning there's going to be 1 to 2 big
Michael Mauboussin,
models in the U.S. and 1 to 2 big consequential models in China. I'd be worried about China because China is doing more an open weight, We're going to have wide distribution of this and dispersion of this. So my eye on the geopolitical thing is never count China out.
One final question. Is Rubenstein doing okay with the Orioles? I mean, bringing in Alonso and all?
Look, I don't have a view on that, but David's had a lot of fun with the Orioles. I know that.
He sits down front. You look at the game, and he's down front in the cheap seats.
And I'll tell you, their
Bob Uecker.
ballpark stands the test of time.
It does.
Still
and
awesome,
there's
Ken
David,
Yards.
who's run a big alternative asset management firm, Carlyle. He hasn't sort of been as troubled in that private credit space. He has the Orioles. He has kind of this version of a podcast where he does his interviews. I mean, talk about a guy, and he served in the American public. He served the public. So there's a kind of,
here all the time.
David, if you're listening, a kind of hat tip to you. You're like a savant.